All right, what is up, everybody? What's going on? This is our second Value Bomb Wednesdays, and I am super excited to get into this topic because we're going to be talking about how to actually leverage 0% interest business credit for real estate. So, this is literally the whole overarching subject of this whole Facebook group. How do we get into deals with as little money as possible? And actually about to show you guys step by step on how this whole strategy works. Because I'm sure a lot of you guys think, how the heck do I get into a deal with no money out of pocket? That's impossible. This is BS. And I'm about to show you guys exactly how to do it so that you guys can start implementing it into your guys' own real estate strategy as well. So let me share my screen and we'll go into it. Kind of the awesome thing here too is I know a lot of it, you know, in this video, I'm going to be talking more so how this relates into buy and holds, but this could literally work for any real estate strategy, whether it's Airbnb, fix and flips, buy and holds, you name it, it's going to be able to work out. But again, I'll be focusing this discussion more so in the context of buy and holds, right? So, how to use 0% business credit card for real estate so that you can create new business opportunities for you guys. So, here's the agenda and how this whole gameplay works. So, basically, first off, we need to understand kind of why this is important and what it's going to do for us, how we leverage the 0% for the real estate. And then next thing we're going to talk about is credit profile optimization, because that's what's going to lead us to be able to actually get the business credit. And then three is, a lot of you guys might be thinking, how the heck am I supposed to buy a house with a credit card, right? So I'll debunk that myth and actually walk you guys through what that process looks like. And then from there, really, depending on the markets you guys are in, if you're in California, you probably won't be able to buy the whole house on business credit. So, something I'm actually helping a client with right now is we're using 0% for the down payment and then going through an FHA loan to fund the rest of the deal. So, you might need a lender depending on what market and state you're in. And then, next thing after you have total funds is working with a realtor or a wholesaler to actually find the deal. And then lastly, right, is this strategic exit plan, right? We're not just here getting business credit just to have business credit. We're trying to make some money. We need to invest in it. And eventually these cards do need to be paid back. But I'm going to walk you through a number of exit strategies. So you have a plan A, B, C, D, all the way down to Z. So with that being said, let's jump into it, you guys. So, boom. So, starting off, why is this important for you guys? Like, literally, most people, the old-fashioned way, what they would do is, they'd spend tens of years, saving a couple $100 a month until they have like, 10, 20K, 30K, or whatever the down payment cost is to get the house. But with the rise of inflation, that was something our parents used to do. That's not really something that makes sense for us. So, with this strategy, we're going to be able to stop wasting money on rent. And the reason why I say wasting money on rent is because, you know, month after month, you're not stacking any equity. So that goes into my next thing is if you own something, instead of paying somebody else's mortgage off, why don't you pay your own, right? And the cool thing with stacking that equity is, after a year, you're going to have enough equity to purchase your next home and the next home and the next home. So that's going to be the beauty of this strategy is being able to get into a deal now rather than have to wait or save all that money on rent. And once you do get into this deal, real estate's appreciating. So you're going to be able to benefit off of appreciation and you're going to be able to write this off on your taxes for depreciation. So all this stuff you can't do if you're just renting, right? And like I mentioned before, you're not going to have to waste time saving pennies to get your down payment. And again, you're going to get the satisfaction of getting into a deal now versus later. So you get that instant gratification and instant benefits. And then from there, a big thing that, I've seen other investors, especially fix and flippers, go through is they'll find a deal of a lifetime, it's super undervalued and they could get it, but all their money is tied up into something else, right? So they end up missing out on the deal. So we don't have to worry about that anymore. And again, we're going to be able to pay as little money out of pocket. So you're no longer asset rich and cash poor. Because again, if you're saving, it probably took you years to get there. And as soon as you hit that 20, 30K, whatever the down payment is, you're immediately back to zero. So I'm sure that probably sucks for people. So that's all the reasons why being able to leverage the 0%, it's a very creative way of doing things, but it's also going to get you all those benefits a lot faster. So, what I wanted to talk to you about now is okay, now that we know the importance of why we needed to use the 0%, is how do we actually get it, right? And this focuses on two big things. Is optimizing your personal credit profile, right? And number two is understanding the 0% funding formula to get approved for 0% business credit cards. Now, just a quick context, I'll go more exactly how we do this later in other live trainings. But for now, just know this is very crucial to actually being able to implement everything I'm going to be talking about on this page and in the later slides. Um, but I don't want to go through every little detail because I'll be here all night if we went through it. But the important thing is when it comes to your credit, credit is everything. If you do not have your credit right, you can't buy a house, you can't buy a car, you can't borrow anything, and you're kind of screwed. No one's going to lend you on anything. So we want to have above a 700 plus credit score. We want to have a thick profile. I'll go into that more, what a thick profile looks like, into another live training. But once we get the base, like your personal credit's the base. Once that's optimized, you have like a 700 plus credit score. You have at least three personal credit cards with a 10K credit limit each, low utilization, no negatives, all that. I would say we could check that off the box. You have at least average age of 2 years of credit. You're going to look like a trustworthy borrower to these banks. Now, the second part too is how do we actually get that 0% business credit cards, right? We want to focus on business credit because with personal credit, if you max those cards out, it's going to hurt your utilization and bring your score down. That's not the case with business credit cards. And also, too, this is a business expense because you're investing. So we want to be able to separate those two things together. But just to kind of give you a quick breakdown, as far as getting 0% business credit, it's all about showing the banks you're a trustworthy borrower. So that's what we'll do here with the optimizing the credit profile and show them that your business looks like it's got a lot of potential. So with that being said, we need to check off the bank underwriting requirements. We need to be applying through senior level VP relationship managers. We need to know the scripts of what to tell the banks. We need the exact data points of what to put on the application and so on and so forth. Again, I will go through more of that in detail in the next live call, but all you guys got to know as far as getting the funding, get your personal credit right and understand the rules to the business credit funding game. And I promise you guys will be able to start seeing, 15, 25, 50K, 60K type of 0% business credit card limits so that you could invest it in real estate. So moving on, let's go. So let's debunk this. I can't buy a house with credit. And as far as that goes, you're totally right, right? The bank's not going to let you swipe a credit card for 50K just to put it down as a down payment, right? However, we could get very creative with using the credit for the down payment or renovations cost, whatever you want to use it for. So in the case of buy and holds, right? If you have a 0% business credit card, like literally just today, I helped a buddy get approved for 35K just on one card. 35K on one card at 0%, right? If he's using this for a buy and hold, right, they're not going to let you buy it on credit, but they will let you buy it on cash. So the question here is how do we pull the cash on the cards? Because traditionally, what you would have to do is get screwed over and pay the cash advance fee. And banks, they're going to be charging 20, 25, 30% on, a cash advance fee, which is total BS. That's just for me, I feel like that's some loan shark type of shit. But there are creative ways on how you could pull the cash from the cards. That's called liquidation without paying that cash advance fee. So imagine, you have 35K on a card, the down payment for a house is only 30K. Instead of you saving, we just pull the cash on the card and boom, you got your house right then and there versus having to wait those 2, 4, 5, 10 years to save till you get that first or, second, third, whatever property it is. So as far as being able to pull the cash from the cards, we go through a liquidation process where instead of paying that 20 to 30%, you're only paying like a 5% fee. Yes, there is a little bit of fee on it, but in my opinion, paying a couple percents is totally worth it versus all the lost opportunity cost of losing out on a great deal, keep spending money on rent, and losing out on appreciation and depreciation. So I think it's totally worth it. Now, the next thing I wanted to go over is, right, depending again where your market is, you might be able to buy a house for 100, 200, 300K, which is, that's totally possible to do with 0%. But if you're in a state with California where a freaking studio costs like $600,000, that's not really going to be realistic, right? So we will need to be able to fund the rest that's not included in the down payment. So if you're a fix and flipper or something like that, this strategy just works it even better because the turnaround time to get the cash is a lot easier. But let's just say we're doing buy and holds, specifically with the client that I'm working with right now. They're getting a triplex out in Hollywood. It's like 800K or something like that. They needed, I think, like 40K or something for the down payment, right? So we were able to get the 40K at 0%, pulled the cash from the cards, and the rest that it's going to get funded with is, if you're doing fix and flips, go through a hard money lender. They will charge interest, but the good beauty of this is since you funded some of it with the 0% card, means that there's just that much more of a bigger piece of the pie that you guys get to take home. But as far as like the buy and holds, you can go through a conventional lender, an FHA lender, like go through any of those. They'll fund the rest of it. So get approved for the lender. If you guys need help with finding a lender, that's something I can help you guys out with as well. Cool. And then next big thing too, after we find that lender, so now at this point we have our down payment and the costs to cover any renovations and the rest of the home, right? Next big thing is getting like, how are we going to find this deal? So you need to have somebody who's going to represent you and somebody who's going to find you the deal. So you could get a realtor or wholesaler. That's pretty self-explanatory. So I'm not going to go too deep into it, but if you guys have questions on some reputable realtors or wholesalers, I do have some people in my network that I'd be happy to share with you guys. They're going to be able to, even if you don't even buy from them, they're going to be a really great source and a wealth of information. Now, at this point, right, basically we've got our house, right? We've optimized our credit, we've gotten business credit funding, we've pulled the cash from the cards, we have the other lender to pay for the rest of the costs, we've got a realtor and a wholesaler. At this point, now we have a deal. You got the keys in hand, you're super excited. You're like, hell yeah, this is my second, third, fourth, fifth, whatever property, and you have the keys in hand. But here's the thing is 0% business credit doesn't last forever. So we need to have an exit strategy, right? So as far as the exit strategy, we got a couple different options, but to give you context, 0% business credit cards, they typically only last, 12 months, sometimes 18 months, right? So we're not in the business of paying interest. We're in the business of leveraging and taking advantage of the 0% so that, we build our assets up, be able to make that passive income, be able to build that family legacy and generational wealth. So we need an exit strategy because the last thing we want to do is be, 25, 50, 100K in debt And then all of a sudden, we're the interest rate after the 0% ends, it's going to go to a normal credit card interest rate that goes from 15 to 30%, depending which bank you're going. So we want to make sure we're able to pay those cards back on time, right? So here's what the exit strategy looks like, right? So let's just say, you've been renting a house this whole time, you finally got into your first house, you're already getting tons of benefits because, right, that the house is appreciating, you're still going to make your normal mortgage payments, so that means you're stacking equity, and all that. So within a year, once that 0% ends, there's a couple options that we could get into. So option number one is, you can simply just sell the property, right? Within that year, it's totally possible it's more likely that than not that it's going to have been appreciated within that time. And you're actually going to make money from literally not doing jack shit. Like, I talked to people who have bought a house a year, like, and they've only had it for a year or two, and then literally within those years, the property's value has appreciated, 10, 20, 50, even like hundreds of thousands of dollars. So, you could literally make money for not doing shit, right? And as little money out of pocket, right? So again, this is based off, you have the property for a year, you're still, getting the mortgage payments paid. That can be through the renters, or if you're living in it, you're still going to make those normal payments you would as if you were paying rent, but at least this time it's towards your mortgage, not somebody else's, and you're stacking equity and getting all the benefits. So again, number one, just sell the property, collect the appreciation, and pay back the cards, and just keep the profit in between. So that's kind of like pretty simple. You might want to be one of those people who wants to keep a bunch of rentals in their portfolio. So if you don't want to sell it and you just want to buy and hold, the other option is keep paying the monthly mortgage, month after month. By the time the year ends, you're going to have enough equity in the home to take out what's called a HELOC. That stands for Home Equity Line of Credit, or do a cash out refinance. And basically, you're leveraging the asset, the equity in the asset of the home as a loan. So you use that, there will be a lower interest rate on it, but then you could use that to pay back the business credit cards, right? And now you get to keep the house. The 0% is all taken care of. You probably still have equity in the home left over to roll over into your next deal. So that's the other option. Option number three is you could extend the 0% terms for multiple years. And this is something a lot of people don't understand, just because you're like, oh, doesn't it expire after 1 year? Yes, unless you know how to play the game right. And basically, with extending the 0% terms, you can just refinance the card onto another business credit card at 0% to buy yourself more time. So, time is your best friend in this game. And through that time, you're going to be able to keep stacking that equity and keep benefiting from that appreciation. So, or you could just do a simple balance transfer. And, there's a lot of different things we could do, but basically take that home or that business credit card and extend the 0% terms for multiple years. Within those years, the house is going to keep appreciating and you're going to keep stacking equity. And then eventually, again, you could sell it or leverage a HELOC or a cash out refi to pay back the banks on their cards. And the beauty of this strategy is literally once you learn the funding aspect of it, you are going to be able, like, along with stacking the equity, you're going to have savings, you're going to have credit, you're going to have the equity in your home to leverage into your next deal. So being able to purchase, one more house, like you could easily purchase one house every single year or more, depending on, how aggressive you want to go after it. For me, we're trying to stack this thing to the moon. So let's make it happen, right? So those are just a couple of the different exit strategies. As far as real estate, there is some risk. Um, you just gotta you just can't be stupid with it, right? Don't just like take out 100K and not really know what you're doing. Start off small. Make sure you have a backup plan behind the backup plan in case something doesn't go right. That way you're always going to be safe. We're really minimizing the risk here too, because it's just like if you're leveraging the debt into an appreciating asset, at the end of the day, it's going to be able to pay itself off. So why would I want to use my own cash for it? Leave your cash in something, for me, I put all my cash into Bitcoin. And over the long term, I don't want to say how much I have, but like, I always have that as a backup and I know it's going to keep appreciating. So why would I liquidate one asset and trade it for another if I know that asset's going to keep growing? So that's another way of looking at it. Like, why would I use business credit instead of my own cash? It's because the more funding options you have, the more opportunities you can make money, as we've seen. Because, right, if you're only basing it off savings, it's only going to get you to one deal. But if you're using savings and business credit, that's going to give you multiple deals to be able to keep investing. So, whew, hell yeah, guys. That's a lot of information, but that's basically the whole overarching theme of this coaching, or just like the free paid group or the free Facebook group. Obviously, I have a coaching program as well where it's a lot more in depth, um, kind of how to on everything. But I hope this was really helpful, and I hope you guys could take at least even one piece of information from this um, call to be able to implement into your own strategy. I truly, truly, wholehearted believe that funding is key to any single business, because the way I like to think of funding's the gasoline, real estate's our financial vehicle. A vehicle needs gas to run, right? So the more gas we have to pump into this Ferrari of financial vehicles, the further and the faster we're going to go to be able to, build those assets up, so we're creating generational wealth, build up that passive income, get that financial freedom, and really just be able to take more time and control over your life versus just having to wait, work on, 9 to 5 that you guys hate or something, if that's the case, right? But that's basically it that I've got for you guys. I hope this was super helpful. Just to kind of leave it off, right? If you guys want to connect, let's connect. And I'd love to explore how we can support your journey towards this real estate market and financial freedom. I'm the funding guy, and I'm very excited to work with anybody who's taking this seriously. I love working with action takers. We just signed up a couple people last week at the launch of this program, but contact me, hit me up through Facebook or Instagram to schedule a consultation. Like, even if you guys don't buy, like, that's totally fine. Like, I'm excited to educate you guys and just open your guys' eyes to see what's possible, because I know there's a lot of stigma on leveraging debt. I'll cover that in more detail in another live call on, breaking down those mentalities on debt, because a lot of people think it's bad, but obviously, if you use it for the right reasons, like I've just explained here, there's a lot of potential that you guys are leaving on the table to get you guys moving forward. So, whew. Anyways, guys, I look forward to partnering with you guys. If not, keep soaking up this information in the free Facebook group. I'm going to be dropping tons of game. Again, every Mondays, Motivational Mondays. Tuesdays is Testimonial Tuesdays, and Wednesdays, which is today, is Value Bomb Wednesdays. So I'm stoked to get you guys as educated on the funding process so that you guys could either start or continue scaling your real estate portfolio. But with all that being said, thank you guys for lending me your ears, your eyes, and your attention. And if you guys have any questions, feel free to drop it in the Facebook group, even DM me. Happy to answer. But as usual, guys, peace out. Much love. Stay beautiful. And I will see you guys in the next one. Peace.